Hi, welcome to the video. Today is the 7th of September. It is Thursday. In today's video we're going to be looking at trading trend reversals. Now in relation to a possible big trend reversal, we think it could be coming in the Japanese yen. The Japanese yen has been in a really big downtrend, but the odds of a reversal have increased in our view. Now in terms of pairs I want to look at, I'm going to look at USD JPY and also two crosses, Euro JPY and GBP JPY. We'll go over to the charts in just a moment. Now in terms of the yen, it is the most oversold major, and if it turns, it's going to turn in a big way, so the risk to reward on this opportunity is really good, of course, in our view. Now we'll go and take a look at the charts, but just before we do that, if you want to learn all our trading techniques, check out our strategy and also our daily technical sentiment analysis of 14 FX pairs. Go to the link beneath this video and get live access to our member centre. You can also follow us on our Facebook page, join our Facebook group of traders if you wish, and finally join our free educational mailing list. Right, let's go and take a look at the opportunities. Just on a USD JPY monthly chart, this is just to show the big picture of how oversold the yen is. Okay, now if we just look back 2 years ago when we were trading, or we came above the 108 level, we've gone up 38%, just 2 years. This year, after the dip, it's up 15%. Most forecasters are bearish of the yen and bullish of the USD. I think the odds of reversal here into this double top are high. I just want to explain my logic by looking at an article I put on my blog earlier today, which you can check out on the link beneath this video. Right, just going to summarise a few points from this article. The main ones, you can go and read it at your leisure if you wish. Now, obviously the yen has been falling because the Bank of Japan have kept interest rates low, so speculators sell the yen, buy a higher yielding currency against it. Now, the yen's weakness has had consequences in Japan. If you look at a measure of the yen strengthening its basket of major currencies near a 53-year low, which is obviously forcing Japanese business and households to pay more for imported necessities such as fuel, energy and food. Okay, that's obviously true, but it gets worse because Japan now has an inflation problem. If we look back to June, Japanese inflation went above US inflation. Wind forward today and you get this. This is core inflation, excluding food and energy. It's just gone parabolic to the upside. Now, in terms of interest rates, they're indicated by the Japanese 10-year bond. When you've got inflation soaring, interest rates should obviously be going to the upside, but the Bank of Japan have refrained from doing this. Okay, now it's not just a problem with core inflation. I just want to give you another chart here. This is crude oil. If we look at it since July, it's gone up 20%. Okay, in price. Japan imports all its crude oil. In fact, it's the third largest oil importer in the world. I could have done a chart on food as well. Food is going up in price, but you get the general picture. Now, this is making the Prime Minister unpopular. Now, this chart is of when the Bank of Japan decide to do something to help his approval. Okay, so Kishida's popularity drops there. Japan intervenes in the FX markets. Intervention is ineffective, but they intervene. Popularity drops. You get a tweak to yield curve control, which is just letting interest rates rise a little bit. Okay. Then its popularity drops. It's dropped even further since this chart was drawn. They lift the yield curve control again, like just let interest rates rise a little bit. Now people say, oh yeah, central banks are independent of the government. I'm not so sure. Kishida appointed the Bank of Japan governor. They seem pretty friendly and have regular meetings. So you could have intervention to help out the Prime Minister, but the Bank of Japan need to do something. The mandate of a central bank is really price stability. You do not let inflation run out of control. Now it's starting to look like it is going to run out of control. So we think the Bank of Japan are going to do something. Maybe they'll intervene in the FX markets. I've said that's ineffective, but they might do it. A yield curve control tweak, I think they should do, and a meaningful one, because they need to do that because inflation is running out of control. Speculators are so short of the yen. If the Bank of Japan do something, even the threat of them doing something could force or see a big rally in the JPY. Right, let's go and take a look at our first pair, which is going to be USD JPY. Right, I can look at this trades in two ways from a technical perspective. On a rally, failure. So if we break higher, we'd look for the rally to fail into these bodies. On the monthly chart we saw earlier at 148.80. Sorry, I spelled failure wrong. Or we'll take a break of support. I'll draw my levels in a moment, but just first of all, we've seen a volatility drop in the last 2 days. After a high volume candle, maybe the market has run out of buying power. They're worried about the Bank of Japan doing something. We don't know, but we've seen price action stall. Now, in terms of a failed rally higher, if we were to punch up through 148, all we'd do is just set an order at 147.80 and hope the rally fails. We'd put the stop back behind here, okay, so something like 149.30, okay, give it a little bit of room, okay. If the trade just ran on to the upside, we'd look a bit stupid, but we'd miss the trade. So that's the way it could go. It could go either way. I think any rally that does take out that resistance level will fail. We shall see, okay. Now, what about if we don't break out to the upside? Well, I think you've got good resistance here. Support, I should say. My apologies. Sorry, I need to just adjust that line. Apologies. Okay, so here we met resistance here, 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 here. Then we punch through. If we break lower, we could see a stop hit. Okay. Now, if we break lower, then I would place the stop just clear of 148. I'll give it a little bit of room, 50 pips back from the level 148.50. Then, if it really started running, you could bring the stop in tighter behind 148. If you break low, you do want to see decent follow through. If you don't, you can always liquidate the trade. Where could we go to? 140. Okay, the specs are really, really long. Maybe even 138. We don't know what the Bank of Japan are going to do, or if they're going to do anything, but no, they cannot let the yen run out of control to the downside, in our view. Okay, so we'll see, but the risk reward is really attractive. You only need to do a small trade. If the yen turns, it'll turn in a big way, and you can add in later on. Now, in terms of USD JPY, I do think it is due a turn, but I really like the look of the crosses. So I just want to look at them, and I'm going to start with Euro JPY. I think the crosses might have more potential than USD JPY. Right, let's go to Euro JPY. Right, we're on Euro JPY, and I've already drawn the levels in. I'll just talk through this trade in a moment, but in terms of why we like the crosses, I've done an article on this which you can go and check out on the link beneath this video. Speculative long positioning in the euro against the yen is more so than in USD JPY. Also, the fundamentals for the Eurozone are terrible in our view. Market is too bullish, so that will come into play in hopefully forcing the euro down. Now, we're already short at 158.70, okay? So we came in, we're at 158.12 at the moment. If you were coming in fresh, and I'm adding to this position, it's my favourite cross, you can add on a break lower or on a rally higher. If you look at this big red, we come down. This rally looks a bit lackluster. If we were to rally into this level here, the 159 level, I would sell. Okay, I'll double my position, 160.20 stop, same as the position I've got in at the moment. Or if we break lower, through 158.70 again, I'll add. Okay, now if we break lower, I'm looking for traction to the downside, so I'll bring the stop in behind first level resistance, then hopefully I can just put it behind these candles here. So we're looking for a really big run to the downside, so basically looking for 700 pips. Okay, so yeah, this is a really good cross to look at. In my view, I prefer it to USD JPY. GBP JPY, right, GBP JPY we're already short. Now in terms of speculative positioning here, it's similar to the positions in the euro in size, so looking for it to get run on stop. We're already short. This level here looks good, first level resistance. If we rally, you could sell back to it. This level I think will hold. Okay, looking for follow through as the specs get taken down towards the 174 level. Now in terms of GBP fundamentals, yeah, traders are way too optimistic about the UK. I live in the UK and it's a bad situation in the economy and for just everyday households at the moment. So yeah, there's three pairs to consider. Most people like to trade USD JPY. I think there's good potential there, but possibly, or I think there's better risk reward in Euro JPY and GBP JPY. Let's see what happens, but that is the video for today. Thank you for watching it.